Hi students, I am C.A. Jupiri, practicing Chartered Accountant Institute, and I am here to give the basics lessons of the partnership accounts. So there is often a misconception, common misconception that learning partnership accounts is an Herculean task. Even for years, I too believed the same. But when I started learning the basics of partnership accounts, it seemed me that it's a matter of time to get into the groove of the partnership accounts. So let's begin with the basics. Before moving to the topics, I would like to invite your attention on two aspects. One is the coverage of topics, what I am going to take, and the problems faced by students while learning the partnership accounts. So this is the preparatory aspects, the preparation, the requirement of your preparation while doing the problems of partnership accounts. Okay, so about the coverage, I will cover what is the partnership is all about, the accounts maintained in the partnership business, then the concept of profit sharing ratio. Almost all of the students are aware of these contents: profit sharing ratio, concept of goodwill, reconstitution of partnership. You may have studied in +1, +2 degree, etc. Okay, so admission, reconstitution refers to the admission, retirement, death, dissolution and takeover, then some miscellaneous topics with regard to interest on drawings, interest on capital, limited liability partnership. So this entire coverage, the entire lecture will cover the topics of CA Foundation, okay, CA Inter second group, and then CMA Inter first group. Okay, this is all about the coverage of our learning or coverage of my lecture. Okay, then the second, problems faced by the students while learning the partnership accounts. See, often I found many of the students, since it is an account subject, they totally ignore the theoretical aspect. But what is in reality is, while if you want to do a problem, if you want to perform an accounting problem, what is required is the theory. The 95% of your question can be performed, can be done only if you are well aware of the theoretical aspect. That is what is called as the conceptual learning. So most of the students lack the conceptual learning of partnership. That's where they're thinking study of partnership accounts is a Herculean task. Okay. Secondly, lack of critical examination of the contents of the questions. During your examination, you may see different types of questions, two small questions, covering a page of your question paper. What the student must do is to critically examine the questions. Learning accounts is equal to learning an English grammar, because while learning an English grammar, we will split the total sentence into tenses, clauses, etc. In the same way, while doing your problems, you should analyze, critically examine what is given, what are the contents of the questions, split into different pieces. So then only the objective of the question can be achieved. And the third is the starting trouble. That is because of lack of practice of questions, and that may lead to time consuming. So these are the common problems observed from the perspective of teachers, that the students must put an end to what the difficulties of learning partnership accounts. So these are the aspects I am giving initially, and slowly and gradually we will move into the partnership accounts, the basics. And for that purpose, students, please enjoy. We can enjoy the learning, not only the partnership accounts, the entire account subject. So let us see one by one. Study the theoretical aspects first. Don't directly go with the journal entries, the adjustments. Study the theoretical aspect first. Already said, if you want to do a problem, then if you cover the theoretical aspect, 95% is over. Okay, so study the theoretical aspects first. If you are doing a problem, connect with the theory. Study the theory first. Then read the question 3 or more times, or until you become aware of the contents. You should read the question 3 or more times until you become aware of the contents. in examination, during examination, this may not be possible because we having limited time, 3 hours. Okay, but if you perform during a practice session, this will become an habitual action. Your inner mind will automatically get into this. Okay, so read the question 3 or more times until you become aware of the content. During this process, we are reading the question, you note down the important points in the notebook. Okay, and connect that point with the theoretical aspect so that you will be well aware of what is the objective of the question. Then thirdly, practice the same question many times. This is important to avoid the starting trouble, to reduce the time consumption. Okay, so you practice the same question many times. How this can be done? Take the same question, change your figures. The figures can be changed. The question pattern should be kept stagnant and the figures can be changed. You can double the figures or make it half and practice the same question number of times. Then revise once in a week. If you make this process as a habit, it is very easy to learn the accounts, especially at tough topics like partnership. Okay, so thank you so much. From today onwards, you practice this, and so that it will help for the long term, even for your final level also. Okay, I'm starting the basics of partnership by covering the theoretical aspect, as I said earlier. And all of you are well aware of the fact that the partnership is governed by the Partnership Act. So we will cover some of the important provisions of Partnership Act, the concept of partnership. The Partnership Act covers 74 sections and section 4 speaks about the term partnership. So what is partnership? It is a relation between, it is beautifully explained in section 4. What partnership means? It is a relation between persons. It is a relation between persons who have agreed to share profit, who have agreed to share profit of the business, who have agreed to share profit of the business, and it is carried on by all or any of them acting for all. So what is partnership? The beautiful definition says it is a relation between persons who have agreed to share the profit of the business, is carried on by all or any of them acting for all. So the partnership business is constituted through a relation between persons. That means there should be more than one person. As per the Partnership Act, there must be at least 2 persons to constitute a partnership business. So this business is constituted by way of a relation between the persons, and they agree. What they agree? To carry out the business. They are relating each other, they are in relation with each other to to conduct a business, and agrees to share profit of the business. They agree themselves to share profit of the business, and the business is carried on by all. All the partners equally contribute to the success of the business, or any one of them acting for all. That means each partner will act for his benefit, for the benefit of other partners, and for the benefit of the whole organization. So what is partnership? It is a relation. It is a relation created by 2 or more persons. They come together for conducting a business. They agree to share the profit of the business. The business will be carried on by all partners, and each partner will contribute for his success, for his own benefit, for the benefit of other partners, and for the whole success of the business. So this is about the definition part of the partnership. Okay, to understand in detail, we should check the features of partnership. Let's examine the features of partnership. So the features of partnership can be classified under the following heads. Number of persons. So the required number of persons to constitute a partnership business. Existence of an agreement. We already discussed in the definition. Agree. The persons agree to conduct the business, to share the profit. So existence of agreement, whether an agreement, a written agreement, a formal agreement, or a registered agreement is required to form a partnership. Then existence of business. The main feature of partnership is the existence of business. If there is no business, there is no concept of the partnership. Okay. Then profit sharing ratio, sharing of profit. whether losses can be included. In definition, we have not seen the term loss. The definition only speaks about the term profit. So, sharing of profit, then the concept of mutual agency. What is the concept of mutual agency? Already explained. All the partners work together, or any of the partners will work for his benefit, for the benefit of others, for the benefit of the whole organization. Then the liability of the partners. So these are the specific features of partnership. Once again, the number of persons required to constitute a partnership, whether any agreement is required, the concept of business, sharing of profit, and the concept of mutual agency, the liability of partners. We have to analyze each and every feature in order to have a clear understanding with regard to the partnership business. And regarding the number of persons to constitute a partnership firm, all of you well aware that the minimum number of persons is 2. And about the maximum number of persons, it is restricted to 50 persons. This maximum number is not as per the Partnership Act. Partnership Act never specified the maximum number of persons to constitute a partnership. The maximum number is adopted from another law. It is adopted from another law, from the Companies Incorporation Rules. Section 464 of Companies Act 2013. Okay, it defines the maximum number of persons to constitute an association or partnership should be restricted to 100. And again, the rules, Companies Incorporation Rules 2014 restricts that limit of 100 to 50. So as per the prevailing law, prevailing condition, the maximum number of persons to constitute a partnership, to carry out the partnership business is 50 persons. Is it clear? So it is not taken, is not specified in the Partnership Act. This is adopted or taken from another act. The reference goes to section 464 of Companies Act 2013, where the restriction is to 100 persons, and again the limit is restricted to 50 persons as per Companies Incorporation Rule 2014. So this is all about the number of persons, minimum 2 persons, maximum 50 persons. Speaking on the existence of agreement, which is the second feature of partnership, we already seen in the definition part that the relationship of partnership is constituted through an agreement to carry out the business and to share the profits of the business. Okay, so what we are dealing with is the agreement of partnership. The partners must agree to carry on the business under the terms and conditions agreed between them. What it says? The partners must agree to carry on the business. The relationship must exist through an agreement. The agreement to carry on the business under the terms and conditions agreed between them. Again, Section 5 of the Partnership Act specifies that the relationship between partners arises from a contract. The relationship between partners arises, that relationship, the definition part, the relation of persons, that relationship arises from a contract between the partners, between the persons who constitute together. Okay, so what section 5 specifies? The relationship of partners arises from a contract between them, which means that there must exist an agreement between the partners. Only through an agreement the relationship is constituted. Then we have to analyze whether a formal or written agreement is required. The Act says formal or written agreement is not necessary. Not necessary. That means you can have a formal or written agreement, but it is not necessary to have a formal or written agreement to constitute a partnership business. But in practice, it is preferable to have a written agreement in order to have legal implications. And such written or formal agreements are called, you heard a lot about this, partnership deed. Partnership deed. So such formal or written agreement is called as partnership deed. So speaking on the existence of the agreement, to conclude what the partners must relate each other through an agreement, and they should follow the clauses agreed to constitute the business which is written in the agreement, and the relationship between the partners as per section 5 arises from a contract between them. as per section 5, and there is no requirement of any formal or written agreement. But in practice, it is preferable to have a written agreement, a formal agreement, which is called as partnership deed. So this is all about the existence of agreements. We will look into in detail in the later part also. Okay. The most important feature of the partnership business is the existence of the concept of business. Okay. That means there should be a content of business in the partnership agreement, or the partner should decide to carry out a business. Let us analyze the most important feature of partnership. The partnership can exist only in business. The partnership can exist only in business. That means if there is business, there is the concept of partnership. Okay. That means that the agreement, we already discussed the agreement part. An agreement will constitute a partnership business, but the existence of partnership depends upon the decision of the partners to carry out the business. If the partners come together through an agreement, but they have no intention to carry out the business, then there is no concept of partnership. So partnership can exist only in business, only when there is an intention to carry out the business between the partners. It is not the agreement alone. It is not the agreement alone that create partnership. So even if there is agreement, we cannot say that there exists a partnership business. It is not the agreement alone which creates the partnership. The partnership comes into existence only when the partners begin to carry business. The partners begin to carry business in accordance with their agreement. So it is the most important feature, that is the existence of the concept of business. So if there is business, there is the concept of partnership. If there is no business, there is no concept of partnership, even if there is a formal or written agreement between the partners through which the partnership business is constituted. Moving on to the next feature, that is sharing of profit. Section 4, the definition clearly specifies that the relation of persons is to agree to share the profits of the business. So sharing of profit is an important concept in the case of partnership business, and no person is a partner. No person is a partner unless he or she has the right to share the profits of the business. Once again, no person is a partner unless he or she has the right to share the profits of the business, which means that, for example, if A, B, C, they came together with an agreement to conduct a business and agree to share profit of the business. Okay. Then C says that I will invest in the business as capital, but sharing of profit is not required. In such cases, as per the Partnership Act, C cannot be treated as partner because he is not having the right to share the profit of the business. So C is a person but not a partner. He can only be determined as an investor, not as a partner. So listen, no person is a partner unless he or she has the right to share profits of the business. So the partners must agree, as per the definition, partners must agree to share profit of the business. If there is no concept of profit sharing, there is no concept of partnership. The person cannot be treated as partner. Remember one thing, while going through the definition given by the section for with regard to partnership, you never see the term sharing of losses. The definition never speaks about the term sharing of losses. Section 4 does not insist upon the sharing of losses. It gives an indication only with regard to the sharing of profit. What does it mean? The partners are not entitled, not obliged to share losses? No, that is not the case. It is an implied condition. If they are entitled to share the profit of the business, they are obliged to share the losses. But the definition never speaks about the loss part. Okay, but it is an implied condition that if the partners are entitled to share the profit, they are obliged to share the losses as well. So, speaking on the sharing of profit concept, as per section 4, the partners must agree to share the profits of the business, and if he is not entitled to share of the profit of the business, he cannot be treated as partner. And section 4 does not insist to share the losses, but it is an implied condition that if there is an entitlement to share the profit of the business, the partners are obliged to share the losses as well. This is all about the sharing of profit. Now, focusing on the concept of mutual agency, there is a concept of mutual agency in partnership. It is already explained in the definition part, section 4, towards the end of the definition of section 4, it is stated as carried on by all. The business is carried on by all, or any of them acting for all. This is the concept of mutual agency. I already explained it. Each partner is working not only for himself, not only for the benefit of himself, not only for his own benefit, but for the other partners as well as the organization. Because the success of organization ultimately leads to the success of partners. Each partner has the right to contribute to the business. So if I am working for my partners and for my firm, it will increase, it will enlarge the business scope, the profit, the sales, which ultimately leads to benefit to each partner. So each partner is not only working for himself, but for other partners as well as for the organization. Listen, each partner is an agent. Each partner is an agent for other partners of the firm, other partners as well as of the firm, for the organization. Okay, so each partner is an agent of other partners and of the partnership business. That means to conclude this point, that means there exists a principal agent relationship. There exists a principal agent relationship between the partners and between each partner and the partnership business. To conclude, there exists a principal agent relationship between the partners and each partner and the partnership business. This is the concept of mutual agency, which is derived from section 4. Okay, the business is carried on by all or any of them acting for all. And now the last feature of partnership business, that is the liability of partners. So let us see how the partnership business is constituted with regard to the liability of the partners. You might have heard the concept or the content or the term separate legal entity in Companies Act. What does it mean? The company and the members are different persons. So unlike in Companies Act, there is no concept of separate legal entity in the case of partnership business. Firm cannot exist without partners. There is no concept of separate legal entity. If there are no partners, there is no existence of firm. There are certain exceptions to this which will be studied later. Okay, so if the firm cannot exist without its partners, therefore there is no concept of separate legal entity, which means the assets of partnership, the assets of partnership business are the assets of the partners. The assets of the partnership business are the assets of partners. In the same way, the liabilities of the business are the liabilities of the partners. In the same way, the liabilities of the business are the liabilities of the partners, which is beautifully encrypted in the Act. So let us see that. Partners are jointly and severally liable for the actions. Listen. Partners are jointly and severally liable for the actions of other partners, and the liability extends to their personal assets also. So speaking on the liability of the partners, it is beautifully encrypted in the Act. What it says, the partners are jointly and severally liable. This is because there is no concept of separate legal entity. If the partners are entitled to the assets, they are obliged to their liabilities. So the partners' liability, they are jointly and severally liable for the actions of other partners, and that liability extends to their personal assets also. Therefore, the partner's liability is unlimited. The partner's liability is unlimited. Listen again. This is because of the fact that there is no concept of separate legal entity. There is no existence for the firm if there is no partners. So assets of the partners are assets of the firm is assets of the partners. Firm means the partnership business. Okay. So assets of the partnership business is the assets of the partners, and the same way the liability of the business is the liability of the partners. The partners are jointly and severally liable for the actions of other partners, and the liability extends to the personal assets also. Therefore, the liability of partners are unlimited. These are the features of partnership business. So, we started the features. Once again I am repeating, we started the features. The first feature is about what it is about. The first feature is about the number of persons, then the existence of agreement, then the concept of business, then the concept of profit sharing, concept of mutual agency, and finally the liability of partners. The partnership business exists only when all these contents are in the agreement. All these contents are in the agreement. There must be an agreement, and all the content should be in the agreement, and there should be an intention for the partners to conduct the business. This is the beautiful features of partnership. So that is the end of the basic features and basic concept about the partnership. Now we will deal with what is an agreement. What is an agreement and what is the relationship of agreement with the partnership.